Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, April the 25th. The year's 2021. Let's talk trading. It's time for the weekly open and gap. And it's also time for me to remind you that these videos are for educational purposes only and that your results may differ from mine. So, weekly open and gap. As you can see here, we have some gaps that haven't filled. We're only 2 hours into the trading day, and the pound has gapped down by 15 pips. We're starting on the opening range for the week. You can see here we're about 40 pips above the opening range for the month and 172 pips above the opening range for the year, going all the way back to January the 4th, first trading day of the year. And we're 234 pips above that yearly open. And you can see we're below the midpoint of the previous week. These are weekly candles. Friday was an inside bar. So, inside bar traders, long trigger at, let's call it 95 at 138.948. Short trigger on an inside bar trade would be for the daily 138. Let's call it 30. Let's just call it 30. 138.30. And you can see here we've got, looks like more than a handful of inside bar trades setting up on daily, weekly, and monthly. So if we look at the seasonality here, that I added that code into the TRO time indicator. It says the pound typically forms a bottom in early to late March, and then it moves higher into the end of April. So we'll have to see how that plays out. Considering this is the last week in April. And it looks like if we dip below the 38.51 area, look to go long at that area, because that'll be breaking out of the inside bar from the week 4 weeks ago. And once again, 2 hours into the trading day, not much range. And we've had one test of the buy zone trade here. The pivot was so close to the daily weekly open, it's not even consider it a bias at all. Rats, 18 pip range, no rat trades at the moment. Weekly pivots at 130, let's just call it 139.00, or if you want 139.01. So that's what we have to do to take out that weekly pivot. And you can see here we already took out the daily. There's the weekly. You can see got a couple missed pivots this year, this month, and no monthly missed pivots until back in 2014. We haven't hit the wick zones yet. And once again, ranges are low. And we went over last week's ranges in Friday's video. Wall mall trade, this is not the hour of the trading day to trade wall mall trades. We usually wait for the London session to begin and trading about halfway to 2/3 of the way through the New York session. I want to go over something that I was working on today. Over the past month or so, maybe a couple of months now, time's flying, been looking at the whole order block and balance scene, the market structure boys and girls and non-binary traders. That's what they've been talking about. So, but I just noticed that the order block, it's almost like the trend, it's in the mind of the trader because there's not just one clear agreement. So what I did was I decided to say, okay, it looks like there's something there because, there's traders using it, but sometimes things work, but not for the reasons that you think they work. And I was talking with Walmart earlier today, and see, to me, the whole idea about the order blocks and imbalances is you can tell a story, and part of marketing, part of selling is telling a story. But I'm not one for stories when it comes to trading. I'm more, I like to, basically stick to the facts. And so what I did was I modified um, an indicator, the TROHL5. And what I did was I added a, a feature. And so what you have to do is set the high and low to false because they default to true. Then you come down here and it says show HCLC, highest close, lowest close to true, and then highest low, lowest high to true. Now some of you might go, well, why didn't you do highest open? Well, usually in Forex, except over the weekend, the close and the open are pretty much one and the same. And I just picked the close. I could always add the open, but it's not going to really make that big of a difference. And then, of course, what I did was I gave it, you can shade it. So here we're shading the highest low, lowest high. And then down here, I said, let's use the last 24 bars, no shift, and we'll just set it up for the current period. So as we switch charts, you can see these zones switch. So if you look back here on the previous day, 24 bars ago, you can see we had the lowest high right here. Well, what did price do? And see right here, this one, see there's the lowest high. And then here is the lowest close right here. And this block right here, or maybe this one, or maybe this one, somebody would call that's an order block. Okay. And so what they do is they let price come back down and they see how it dips in and then they take the trade. Well, what about if you just use the lowest high and the lowest close, and what happened? It went up, dipped back down, and you take the trade. It's basically the same thing. It's just they have a story to tell about institutions and everything. And what do I look at? I'm just looking at highs and lows and closes, something that we can all agree upon. So we can all agree upon that this is the lowest high because the indicator's telling us that, but we can see right here, out of these 24 bars, this is the lowest high. It's just that simple. On the upside, you can look at the same thing. Here was the highest low, and here was the highest close. So somebody might call this, actually, they might call this one right here. This here would be the order block. And so what happened? Price created this order block and then came down and came back up to it and then fell back through. But this was over the weekend here. But the principle's the same. So, there's more than one way to look at things, more than one way to analyze things. I just try to stick with highs and lows and opens and closes because we can pretty much agree on that if we're looking at the same chart. Of course, if you've got one broker and I've got another broker, we might see the opens different or the highs different. It might be off by a pip, could be off by 10 pips. But if we're looking at the same chart at the same time, I don't think there's going to be any argument over what's the high, what's the low, because there is no argument. It's objective. Whereas, is this an order block, or is this one? Is this one? Is this one subjective? So that's the difference there. And the other indicator here, I wrote this indicator. It's the multimeter high, low, low, high. And it'll be in the next, maybe in the next donational batch. I'll have to decide which ones I want to send out. And so what this indicator does is it tells you got the close minus the highest low. So right now on the monthly chart, you can see that the close is 201 pips above the highest low. But on the M1 chart, you can see here, it's here's the lowest high and price is below it by 1 pip at the moment. So what this does is you can just, take a quick scan and you can basically see your trade opportunities. So because if it's in between, you don't have a quote unquote order block situation. But if you see the numbers start to light up, so right here, now we're on M5, we can see here that prices dip back down. So if you're trading off the M5, looking for the order block, you have an opportunity. So, that's just one of the things to look at. And I guess, in the coming week, got some pretty interesting topics to go over. At least I think they're interesting. I think the thing is, I've talked about focus and keeping things simple. And what happens is that we have a tendency to want to improve, make things better, but sometimes by you push it too far and you actually make things worse. It's like when you're cooking, just a little more salt. Ooh, a little more salt, and then all of a sudden, too much salt, you just ruin the dish, right? Well, it's almost the same way with trading in these charts. I mean, you can add so much stuff to it that it becomes almost unusable. That's why I try to stick to things that use horizontal lines. So for example, once again, this is just horizontal lines, nothing fancy, no higher math. The only calculation is which is the highest, which is the lowest, and the distance price is from those lines. I mean, it's not complex at all. And as you can see here, indicator just lets you know that price left that zone on M1 and M5. And, with the multimeters, I don't know how many people use it. I know everybody seems to like the candle color multimeter, so you can see what the candle colors are. But I find some of these other ones that I've created useful because I can just, just with a quick glance, I can see if there's an opportunity. If there isn't, I don't have to do anything. If there is, I know exactly which chart to go look at. And since I'm only trading, the pound, focusing, pretty much on the pound, I can just go ahead and switch, and there's just some things that are just really obvious once you start to use them. So, and there's a ton of the of those multimeters out there in the TRO build 1300 file and the ones before, because over the years I've literally, I think, written probably a good 100 or more. So if you have any questions on any one in particular, you want me to do a video on one, let me know. I know somebody asked about a holo and says I seem to get distracted whenever I do a holo, so maybe we'll review holo sometimes this week. But this is almost a holo review. It's just for using the close instead of open, but pretty much the same. And you can see here prices dip back into those zones. So fellow traders, hope you had a fun and safe weekend. Hope you have a profitable week and end the week and month profitably on Friday. So Just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One. Over.